One of the biggest changes that was announced as part of this year's 2016 budget was the reduction yet again to capital gains tax rates. When I trained, capital gains tax was 40% for an awful lot of people. Tim, what was it when you...
Well, from 1965 to 1988, it was 30%.
Right, and now it is falling all the way down to 20%
Yeah.
for high rate taxpayers, 10% for basic rate taxpayers, which, first of all, is extraordinary, but is it a bit too low almost these days?
Well, it was a very surprising announcement on budget day. We weren't expecting it at all. If you're a basic rate taxpayer and you've got some spare basic rate band, a year ago your gains would have been taxed at 18%, but if you didn't have any spare basic rate band, the gains would have been taxed at 28%, whether you were higher or top rate taxpayer. And many of us thought that actually that wasn't too bad, 28% capital gains tax compared with, for a top rate taxpayer, 45% income tax. And capital gains tax doesn't raise a huge amount of revenue for the Exchequer, and it's worth reminding ourselves that it's basically an anti-avoidance measure to stop individuals converting income taxed at high income tax rates into capital gains taxed at either nothing or lower rates. Anyway, the announcement did take us by surprise, but it's come into effect immediately. And today, if an individual were to sell shares of, quoted shares, any other investment assets, commercial property, works of art, the capital gain would be taxed for higher rate and top rate taxpayers at just 20%, for basic rate, if it's within basic rate band, at just 10%.
And so it's worth appreciating, once we add in the annual exempt amount, which is around about £11,000 this year for an individual, it might be worth having a chat with the advisors just to say, you know, are there ways and means by which we could use up these allowances each year, perhaps sell some shares and what have you, to save quite a lot of tax?
Well, particularly with husband and wife planning, it's always important to make sure that each of them benefits from the annual exempt amount, but also each of them should make sure that they use their basic rate band if available for capital gains. So if one of a couple is not working and has no other income, then that individual has got 11,000 of personal allowance and then a 32,000 basic rate band. Well, take the 32,000 basic rate band, and if you allocate gains that the couple make to that particular spouse, those gains will only be taxed at 10%, whereas in the other spouse will be 20%.
So well worth having a look at some of the possibilities here. People listening will have noticed you said shares. Yes, I've got some of those. I could do that. Commercial property, you said. A number of people are now thinking, well, I'll take that buy-to-let property that I've got and I could sell that at only 20%.
Well, the Chancellor is well known for his aversion to buy-to-let landlords and second homeowners, and so I'm afraid the gain on residential property isn't going to benefit from these reductions in rates, and there'll be an 8% supplement on the capital gains tax rate if it's a gain on residential property. So a typical buy-to-let landlord selling a residential property today will still be paying 28% capital gains tax, not, I'm afraid, the reduced 20%.
But as far as our viewers are concerned, that's pretty much the only thing that stayed at 28% and 18%.
That's right.
It does devalue the various reliefs that we've chased sometimes. People have chased entrepreneurs relief. I must meet the requirements in order to get entrepreneurs relief. Nowhere near as attractive, of course, as the main rate falls.
Well, it devalues it a little bit. We're now looking at a 20% top rate of capital gains tax compared with 10% if the gains qualify for entrepreneurs relief. I mean, it's still halving the capital gains tax, so it's still well worth having, but he hasn't chosen to reduce that 10% entrepreneurs relief rate any further.
So the advice, I guess, is to have a look at what we can do each year. Don't simply wait until there is a disposal, because at that point there is an inevitable gain that will be taxed in some way. Have a look each year at the things that are open to you. Particularly, I would say, it is still very low. Even those residential property rates are still much lower than the the income tax alternatives.
That's right. And let me just add that if we're looking at maximising within a family the benefit of these reductions, transferring assets from one spouse to the other is what you would need to do. Now that triggers no gain or loss, but you do actually need to do it. It's not a matter of just selling an asset that one of them owns and putting that gain on the tax return of the other one. That doesn't work. You've actually got to transfer the interest in the asset to the spouse that's got the spare basic rate band, and then that spouse sells it, and it's then his or her gain appropriately.
Okay, so an awful lot of planning that can be done there on something as simple as a reduction in a capital gains tax rate from 28 to 20 and from 18 to 10. Do get in touch with the guys at Rothmans. I'm sure they'll be happy to talk you through the various possibilities as far as you're concerned.